how I love the city of mine. It never gets me down, city of mine. How I love the city of mine. It never gets me down, yeah.
I was born in the city, I was raised on its edges. My pop worked his life when it's complex. I found love in its center. If I could live here forever, think it'd be for the better. I love the weather, even though it's fog 24/7. I love the people, this is city. I met all my best friends, and I wanna thank every break. I wanna thank every entrance to every building that I step in this city of mine. I owe you most my best moments in life. See, I fell in love for the first time in Golden Gate Park. I saw my first rap show at Great American Hall. I used to beg my homies for a ride across the bridge to goof off and spend the whole damn day doing whatever we want. Keith drove us down to Ike's place while we roll up a blunt, and me and Jack would get stoney, walk around and get lost. Don't think I'll ever truly pay back all I was lucky to get just by walking through the city. No, I'm a small part of this.
City of mine. How I love this city of mine. It never gets me down, city of mine. How I love this city of mine. It never gets me down, city of mine. How I love the city of mine. It never gets me down, city of mine. How I love the city of mine. It never gets.
What's up, everybody? We are live, streaming on all the platforms, the YouTubes. I believe the LinkedIn is in the building, as well as Facebook. So let me know in the comments where you're tuning in from. Purple Monet says, I am at work. Can't wait to watch and catch this later, y'all. So welcome to the live stream. We're going to be looking at, one of the stocks that have just been in the headlines lately, which is our good friends Netflix. I don't really know if they're our good friends or not, but the stock has been getting crushed, just downright smacked around and spanked. So we wanted to just go live, talk about the rise and fall of Netflix. I also want to talk about some different ways you could have protected yourself if you were in this trade, and some different things that you can consider now that the stock is sold off. Technically, it fell like over 100, but if you really look, the stock's down like $500. So let's pull up your comments and see if we can get you there on the screen. Doug Tolliver says, "What's up, Coach? Chatting in from Washington State. Must be hanging out on the YouTubes." Glennis Ralph checking in from Atlanta. I do not know what those letters are, but they said weirdo Netflix. Dennis says, "What's good, Coach? AXP beat earnings, missed on earnings. They beat earnings, but then missed on earnings, and I paid a small price. Glad I went with an out of the money call." AXP is what, American Express? So yeah, looks like the stock's down a little bit. It said missed on guidance there. So yeah, that can happen, man. A stock could totally beat earnings and just miss on guidance or miss on something small. And I mean, the stock then totally tanks. If you look at, let's take a look at Snapchat, since we're just talking about stocks here for a second. Let's take a look at Snap, and then we'll get into our good friends Netflix. But look at Snap, same thing, right? So Snap grew user subscriber growth, but they missed on profitability, and they missed on revenue. And so, yeah, it was up for a second, but the stock sold off, and we're going to see if it holds this level and breaks or not. But let's talk about Netflix. Let's start there, and then we can bring in some other trades, some other stocks, and see what goes on there. So let's talk about the rise of Netflix first, because I think in order to understand the fall, you got to understand the rise. And so if you look at Netflix, This is why it's important to pay attention to what's going on in the economy and what's going on with your stocks. If you look at Netflix pre-pandemic, if you look at it pre-pandemic, Netflix has been trading in this range right here from about, what's that, 250 up to about maybe 375. So it's been in this range pre-pandemic. Now, much like any company who is dealing with people who are stuck at home, you had a boom in sales, right? Whether it's DocuSign, whether it is Zoom, anything that benefited from the stay-at-home economy, you got a pretty big jump. And so here comes COVID-19. Everybody's stuck at home. What are you going to do, right? You're definitely going to watch TV. So boom, you get a pop and more people are signing up watching TV. COVID's lasting longer than we thought. And then boom, you get this explosion all the way up here to $700. All right. So if you're paying attention to what's happening in an economy, you kind of could see the writing on the wall of why the stock should explode. But now you still have to continue to pay attention. You can't just take your eyes off the ball now. And so if you continue to pay attention, I want you to tell me in the comments, if you've been continuing to pay attention, what has now changed in the marketplace for a company like Netflix? So we had the pandemic where everything was good and the stock went up. Because why? Most people are, quote unquote, stuck at home. They're watching TV shows. So it made sense for the boom. But now let's talk about the opposite side of that. Why do you guys think that Netflix is falling right now? Yes, we know that they lost subscribers, but what can you attribute to what's going on in the world and the economy to Netflix's loss of subscribers? Let me know in the comment section, because I want to just see how you're thinking about the information that you're getting in the world and how you're processing it with respect to your stock trading. A lot of people like to watch the news, but they're not really asking, what does this really mean for my stocks? What does this really mean for my trades, for my portfolio, or for the companies that I'm investing in? And so one of the things that is happening, AD says other streaming services. So let's pull those comments up and let's kind of talk through it a little bit. So AD says other streaming services and the Ukraine war, right? You got it. Glenda says COVID-19 recovery. Very important one right there, right? And then politics, and I'm not sure what wokeism is. Tom Hughes says, much has been made of the anti-woke backlash, but that would be overwhelmingly from retail investors, not the institutional ones. I'm not sure what the anti-woke backlash is. I'm not even familiar. I might have to Google that. And then Antonio, can you check and make sure we're live on LinkedIn as well? What is the anti-woke backlash? I'm just Googling that because I am not familiar with that. Anti-woke backlash. A crusade that has come to Europe. Renewed calls for racial equality as Black Lives Matter. Okay, I wasn't familiar with that term of the movement being called that, the anti-woke backlash, but okay, okay. The pretentious woke culture trying to act enlightened, got it. And then Laura says all the above. Is LinkedIn working? Just double checking. Okay, cool. Just make sure my LinkedIn people are there because I didn't see any comments from LinkedIn, but as long as the live stream is working. All right, so let's take a look at Netflix and let's bring all those things to bear, especially right here. Other streaming services, the Ukraine war, Glenna said the COVID-19 recovery. So let's talk about how that plays out on the chart here. So now you had COVID-19, you had everybody stuck in the house. Everybody and their mother was watching Netflix. Now, let's bring up some of the other stuff. So number one, you got more streaming services, all right? So you got more services to choose from. So you have Hulu, you have Disney Plus, you have now Discovery Plus has their own thing. So you got more services to choose from. So that is going to be a problem because Now people are divided. Do I have Netflix? Do I keep Hulu? Do I keep HBO, Showtime? All these services are starting to add up. So if they're fighting for the same customers, then there's going to be less customers to go around. All right. Number two, let's go COVID-19 recovery. So if there's a COVID recovery, what does that really mean? That just simply means that more people are not afraid to travel. More people are willing to go outside. You're probably tired of your kids or being inside watching TV, or you and your husband or spouse, your wife or your significant other sitting on the couch watching TV. You're like, let's cut this off. Let's get outside. Let's get back active. Let's get back moving. The weather's better. COVID-19 is kind of under control. So with the COVID-19 recovery, what you have is people starting to cancel their accounts. You're like, maybe we'll revisit it in the winter. Maybe we'll check it back out if COVID spikes again. But for now, let's get back to traveling. Let's get back to moving. Let's get outside, right? So you got the COVID-19 recovery. But this one, number three, is a big one too. You got the Russia-Ukraine war. I'm just going to put war because everybody knows what war we're talking about versus me trying to spell Russia and Ukraine. You got the Russia-Ukraine war. And so I've been saying this for a while to our members, and I think this is going to hit a lot of other companies and not just a Netflix. And the thing that I've been saying is that, guys, we just literally cut off an entire country. We just cut them off. We said, we don't want your oil. We said McDonald's isn't going to sell over here anymore. Nike's not going to sell over here anymore. Apple said they're not going to sell over there anymore. We just cut off an entire country. And some of these stocks behaved as if nothing happened. Some of these stocks are just like, that's no problem. The consumer is strong. Demand is strong. I'm like, we just cut off an entire country. That's an entire country of Netflix accounts that just got cut off. It's not like the people over there are going to be like, well, we're just going to pay our $20 anyway to Netflix until they turn us back on. They're like, no, y'all cut us off, cancel our accounts. All right. So you got a whole country that just lost all their accounts. So now let's go back and take a look at this. I think the first sell-off you started to see is like people got more services and other people to choose from. And then you got a little bit of a bounce. Then you got people that realize COVID-19 is under control and people are leaving. People are going outside. People are traveling again, right? And so that was the second leg of the sell-off. So you got number one, you got number two, and then I think number three, you got this big gap down here on this last earnings. So this is kind of still 1 and 2 combined, right? Boom, right? So this whole leg is like 2.5, right? Maybe 2.5, right? And then you have the Russia-Ukraine war and all those accounts that got canceled. You got an increase in spending for content, and bam, you get number three. You get the third leg that happened. You could almost argue that if we just take 2.5 out and just say this whole thing is kind of, one is the beginning, number two was this middle leg, and then boom, you just got number three happening. So if you're paying attention to what's going on in the economy, you're paying attention that there's more competition. Disney, Hulu, all these streaming services. Then you got the COVID-19 recovery. Then you got the war. You start to realize like perhaps you could have saw this sell-off coming. And so now let's talk about the fourth thing we want to talk about, or the next thing I should say, which is it time to buy Netflix now? Which is going to be a hard pill to swallow. So if you look at from a chart perspective, and we just kind of zoom it up here, you can see that support for Netflix, we basically just reclosed this gap right here. You see how it gapped up? It might be a little hard to see, but the stock gapped up and then ran. Well, this was the first time we gapped down and closed that gap. So if we were to draw a support line right here from where it gapped and just snap it kind of straight across, you can kind of see we're back to 2018 levels on that stock. And the question now becomes, is at 2018 levels, that just means if you take out the pandemic, right? So this right here, I'm going to make it green. This was the pandemic boom right here, right? This was all pandemic boom. And this was the fall of Ukraine, Russia, competition, COVID-19. All right. So if you got the COVID boom right here, if we take the COVID boom out, what are we left with? We technically should be left with a predictable, repeatable pattern. So the real question we have to ask ourselves is, has things gotten so bad? Like we understand it makes sense to give back the COVID-19 rally because people are going back outside. It also makes sense to sell off because of the Russia-Ukraine war. Now we had Russian, I'm assuming Russian accounts, maybe Ukraine accounts before the war started. So you could argue that if we were doing these numbers before the war and before the pandemic, perhaps Netflix still has a little bit more to sell off because we don't have the Russia and Ukraine global accounts to account for. So to some extent, perhaps it should sell off a little bit lower than it sold off before. So to some extent, it's quite possible that Netflix could fall a little bit more. You also have some new information that said Netflix is going to, I don't know if they're raising their prices one more time or raising them again. I have to look into that, but they might be raising their prices again. And I guess they're starting to limit the amount of people you can share your accounts with. So what does that mean? Maybe me and you bought a Netflix account. It was $20, but we were okay splitting it and paying $10 for it and sharing our username and password. But if they're going to cut that off, and now we're like, great, it's $20 for you and $20 for me, you start to really question, do I still want to have a Netflix account? So there's some turmoil that could potentially cause the stock to continue falling. And so as I look at this chart, on Netflix, as I look at this chart, I guess the conclusion I'm coming up with is this stock might not be done falling. And I think the bears are still in town and most likely going to eat Netflix's lunch, at least for another quarter until we see how subscribers stabilize. So that's my thought. I don't think this is the time to buy. I think this is the time to wait and see if the stock stabilize and see what's going to happen with subscriptions, because all of those things we just talked about are really not a positive catalyst for the company. The war in Ukraine and Russia, we don't know when that'll be over. With COVID-19 recovering and people getting back to traveling, they may never recover those customers. And then they've just introduced a new potential problem, which is possibly raising prices, possibly limiting the amount of people's username and passwords that they can share, and toying with the thoughts that they might bring ads in. I don't think people will mind ads as much because you're used to ads on platforms like YouTube, different things like that. But I can tell you, as a person who has a Hulu account, I get irritated that I'm paying for Hulu and I'm still getting bombarded with commercials. I'm like, so y'all get to charge me and still show me commercials all day? It's kind of irritating. Alejandra, welcome to the party. Welcome to the live stream. So those are my thoughts on Netflix, guys. That's the rise. That's the fall. And is it time to buy? I'm going to say it's not. I'm going to say, I can't say with any confidence that it's time to purchase Netflix. So what questions do you guys have for me? Throw them up in the box. We'll take a couple of questions and answers, and then we'll wrap up the session. So if you got questions, throw them in the box. Let's talk through them. If there's any other stocks you want to see, maybe we can look at one or two, and then we'll go from there. Alejandro says, what about Apple? Let's take a look at our good friends Apple here. So AAPL. I like Apple as a company, but you got earnings coming up. And much like Netflix was the first to report, you got to wonder, is Apple going to feel some pain from not being able to sell in Russia, feel some pain from the upheaval that's happening in Ukraine? Are they going to feel any pain from the supply chain issues, from the increase in interest rates from the federal government? And so when you look at it, you can see where you kind of got this triple top right here that's happening, right? Boom, hit resistance, boom, hit resistance, and then boom, hit resistance. So comfortably, I'd love to see Apple come back down to about this level right here. If it can come back down to here, I think you look for an opportunity to buy. But as of right now, this is the pattern, and it's most likely coming back down here. Most likely. I don't know that for sure because they could have good earnings and then the stock could skyrocket. But in this market, good earnings are not really being rewarded. So I don't even think that good earnings is going to push this back up to the top. I think even if they have good earnings, you might get a pop and then you might get a sell-off until we get back down to this area where people like the stock again. So we'll just have to wait and see what happens. All right. Then it says, do you think the XLF, here, let's just pull it up like this. Do you think the XLF goes lower? Thinking about taking a put on the XLF. So the XLF is the financial sector. You can see right here with the XLF that I think you're late to the party on the XLF. Remember, when you're taking some type of calculated risk, you want to take it near the top. And so you can see up here where we had this triple top, like boom, boom, boom. Like this was a good chance to try a put option right there. This was a good chance. This was a good time to try a put option right there. What happens is when you wait till it gets down here, down here, down here, or down here, and you're like, I'm thinking about getting a put. It's like, sure, you could, but history has shown once it gets down here, we get a run up, a little bit of a run up, a little bit of a run up. Fail for a second, a little bit of a run up. And so essentially what you're trying to do if you're going to buy a put right now, you're like, I'm going to try to make money in this little area right here. Unless the bottom just totally falls out on the financial industry, which could happen, but it hasn't happened yet. And so to me, just looking at the chart, if I were to draw some support and resistance, I think for you to try to buy puts right here down at the bottom, I think it's kind of dicey. It's not a low risk, high reward. It's a low reward, high risk trade. And I like to take, well, when I'm paying attention, sometimes I take high risk, low reward. But if I can help it, I don't like to take those type of trades. So Dennis says, got it. Let's see here. Karen says, what about AVAV? I've watched the stock for the last couple of months. Let's look at it. AVAV. This is what I call an ugly chart. Okay. Because you had this downtrending channel right here, which I like. I like that because we have a little bit of predictability, a little bit of repeatable pattern. You can see bam, 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 bam. I like that. And then it just fell off the cliff. Perfect. But then you got this random stuff, right? You got this like, we're back. And you're like, what just happened? The stock just went from 56 to 114. It almost doubled. And you're like, why? And you're like, I don't know why, but now we're done doubling. We're coming back down. So I don't know if I'm going to wake up and the stock's going to be back at a 120, or I don't know if I'm going to wake up and the stock is going to keep falling to 52. So for that reason, I don't like it as a trade. But if I was just going to trade it anyway, if I had to just base it off this, I got an increase in selling volume. I'd want to see if it can break this level right here, because this could be a level where it holds. If it breaks this level, I think look out below. I think you can make some money from some puts from the stock falling. So that's what I would pay attention to and consider on this trade. All right. So everybody who's watching, whether you're on YouTube, Facebook, LinkedIn, thanks for hanging out with us. I hope you enjoy the rise and the fall of Netflix and how to potentially look at that and take information from the news, from the market, from what's going on, and ask, how does this apply to my stocks that are in my portfolio, my trades, my investment? And should I be making some adjustments before I wake up and my stock is down $100 or my portfolio is down 50, 60, 70%? So let me know in the comments what your top takeaways from. And I'm signing off saying, remember, you never go broke.